Alrighty. Sam, this has been a while getting together. How are you, man?
Oh, sorry, it's been a long time coming, but yes, finally we're here.
Well, you're only the founder of a firm that seems to be killing it in Singapore. Your time it's a little busy, right?
It's getting started. Still hustling like crazy, Ned. It's early days. Yeah.
It's interesting, right? We're both founders. You started in 2017.
17, 18, yeah.
How old are you, Sam?
I'm actually way older than I look. 51 now.
Okay, so I was going to say,
51, yeah.
I'm in my 50s too.
Yeah.
So I'm going to ask you the hard...
We're very similar, yeah.
I'm going to ask you the hard question.
Yes.
What possessed you to leave a perfectly good job to do a startup?
I knew you were going to go with that. Well, actually, I didn't leave to do a startup. That's the first thing.
Oh.
I'm an accidental entrepreneur, right?
Okay.
One of those. Never mapped it out. Never mapped my career out even. I was an accidental finance guy.
Yeah.
So I was at Morgan Stanley for a very long time, 17 years, multiple different roles.
I saw that. 17 years at one place. I mean, that's a good
rare
run.
These days. It's good inning. And multiple roles though. Hong Kong, Singapore, 2 locations. I was similar background, equity, kind of sell side, equity research, and then moved to asset management, the buy side in 2005 when I came down to Singapore. And that was a transition, right? And every time actually I did something that was what most people thought was crazy, which is, I gave up a promotion, a bonus at the end of the year.
Hold on, you gave up a bonus? Yeah, definitely crazy.
Yeah, it's crazy. Yeah, in those days, in those companies, no one did that. But I wanted to just try new things. I was still young, I felt, even though I was in my 30s. I felt young and I thought I wanted to learn different things and get to a goal of doing something that I felt was going to be more meaningful. So those were the transitions, and I got to asset management and I was an investor throughout the whole career. Even though I took on the CEO role at the end, I was pretty much an investor. So I was investing in public market equities, Asia, emerging markets, did some asset allocation, macro stuff.
And you were making decisions. You were making investment decisions.
Managing billions of assets. Yeah, investing in Tencent and TSMC and Samsung and all the big tech companies that really grew with my career. So when people talk about great investors, and I did not bad,
Hey, if you were in TSMC for back then, that's a good investment, man.
And a few others, that's not a bad ride. But the point is that a lot of the returns you generate is normally the market, right? It's beta, the cycle, that you're in. And I was fortunate. I joined when the Asian financial crisis was over, and I rode it to the global financial crisis and beyond. So I think I had a pretty good tailwind behind me. And when I left, it was because I'd done pretty much everything I wanted to do. I was CEO, CIO. I didn't want to go to the US or any other location. I was satisfied with Asia. And I thought that I was going to pivot to the space of financial technology, which was a very exciting space. And Ned
everybody was doing it.
My predecessor, or moved ahead of me, the early pioneer. And so in 2016 and 17, I was just getting itchy. I was doing the same crap every day. Doing all this stuff internally, taking 9 p.m., 11 p.m. calls with New York.
Don't you love those calls, man? Aren't they the best?
And the last straw was I was in Hawaii with a family. And they scheduled a global exco call at 9 a.m. New York, which was 3 a.m. And they were like, "Oh, Sam, sorry, we forgot." And
did you do it?
No, they made me do it because they had to discuss China strategy. And I was like, the guy for Asia. And they were like, "Well, you have to dial in." So I was like, oh my God, I was literally in a hotel room, cramped in a toilet, taking a call on China strategy.
You're living your best life, man.
Morgan Stanley Asset Management globally. And that was when I realized this is not it.
And it's funny, that is a first world problem, but it is if you've been doing it. And I remember, when I was at E-Trade, and I was based in Asia, and I was on the kind of management, and they're based on the West Coast, Palo Alto. Right. And so their calls, they'd do them at 9, 10 a.m., it'd be midnight, 1 a.m. And one time I complained, and not a lot, because again, it's first world problems, but still, it was 1 a.m. I was like, did we really? You know what the guy said to me from America? He's like, "Ned, you live on a tropical, almost tax-free island. Shut up." I was like, well, he does have a point.
Is a first world problem.
He does have a point, but I know what you mean. You get to even though it's been a great career, it's a great company, And Morgan Stanley owns E-Trade now.
That's right.
So we both kind of come through the same.
From the same, yeah.
But so you got to the point where even though you appreciate that ride,
and don't get me wrong.
It was time.
Yeah, and don't get me wrong, I fully appreciated that career.
Of course,
what it did to me, what I learned from there. And Morgan Stanley is an amazing company.
Yeah.
We just saw the leadership transition. I actually do know Ted Pick and Dan Sinkovitz, the co-president, is my ex-boss at Morgan Stanley Investment Management.
Because James Gorman just left, right?
Yeah, well, he's still there until the end of the year, and he's transitioning out. And I thought that is Morgan Stanley culture. The way they did that was amazing. How they kept the three biggest guys. Yeah. They worked together and they transitioned so smoothly. If it was Goldman, then, two of them would have left, right? So I do really value that culture, the client centricity, the really focusing on client first. And I learned a lot, tremendous, fantastic people that I learned a lot from, and that, sustained me to this day. But I did want to do something that was much more meaningful and purposeful. And, that was my half time. I took a full year out. Okay. I did really strange things. I went to theological seminary for a while. I did some international management course at NUS, Stanford.
Wow.
And I just retrained myself. I really got involved, in fintech, the space of fintech, investing, advising. And I thought that's what I was going to do. I was just going to remain an investor.
Yeah, right. Helping firms because you got experience.
Advise, mentor, blah, blah, blah. And, And that's when I discovered that there were these gaping holes in the financial technology space. And I come from a very institutional background, right? We both do.
Correct.
And a lot of the fintech at the time was solving really what I felt, to be honest, it's not basic, but it's the more basic financial services that are provided by what we call the commercial banks, not the investment banks, right? So it's payments, it's lending, it's FX and those kind of stuff. And capital markets, right? Or wealth. Were two massive gaps that I thought was really interesting, and no one really was doing it in the right way. And I could see why B2B made sense, right? For wealth, right? And why you would go there.
Did you nearly go there?
No. So I was always passionate about changing individuals and families in their lives for the future. And I was hung up on this macro theme of the global pension crisis, retirement adequacy, and old age poverty. And I had some personal experiences that really cemented the need to solve those problems.
And it's a real problem.
It's a massive, massive problem. And people talk about the environment. People talk about a comet dropping from space. But really, the biggest single tragedy that is befallen humanity and our society is the fact that people are living longer and they retire, stop working, and the quality of their life drops tremendously, and many people live in poverty.
It's crazy,
right? It's crazy. And they're living 20, 30 years beyond work in poverty, and we need to do something about it, and not enough is being done.
And even in America, which is the most developed country, and I'm sure I butchered this stat a little, but it's pretty much accurate. 50% of people don't have $400 in savings.
That's crazy.
And that's America. I know America's got all of its challenges, but it's the richest nation in the world.
Absolutely.
So you're not just talking about societies that are kind of developing, even developed.
No.
Okay, so you found this.
So two more stats. I mean, just anecdotally, we live in Singapore. There's a social, massive social safety net, CPF, everything. Yeah. And yet we still see aunties and uncles having to work into their 70s or 80s even, doing menial jobs in order to sustain their living. And homelessness, people don't know this, is a growing problem in Singapore. And so very small, but it is a growing problem. And it's going to be a bigger problem in the future. And Singapore needs to do more. I come from Korea. Yep. I was shocked when I went to Korea. I've never actually lived in Korea in my adult life, but when I take my family back home, because my parents are there, my in-laws are there, and I was doing some charity work where people were delivering the charcoal into what we call the moon villages, the rough, poor neighborhoods of the hilly, mountainous areas of Seoul. And there's a lot still there. And there was a charity work that my friend was doing, and I took my whole family on Christmas Day, and it was shocking that people still don't have gas pipes piped into their homes.
One of the richest nations.
It's the biggest success story in Asia.
Correct.
And one of the richest nations is an OECD nation, the rich club, whatever, rich nations club. And yet it has the highest old age poverty of 50% already.
What?
It's crazy. And so we all need to do more and we all need to do better. And that was kind of the genesis of why I came together with two like-minded guys and got this going.
How did you, so the problem is clear, right? Being old without can be
money.
old, you can be broke, just don't be old and broke.
Yeah.
Right? Those two together are not.
If you're young and broke, you still have hope.
Correct.
Yeah.
You don't want to be. Moving on to the next part of the story, meeting founders, right?
Yes.
This critical little juncture in life. Did you know Greg and your other co-founder?
Well, the other co-founders left now, Yuning.
Okay, yes.
And then we had like founding team members. So we had Sinting, who's our chief client officer, and Ju, our chief technology officer.
I know.
But really, it's Greg and me.
So where did you know Greg? How did that happen?
So the person who brought Greg and myself together was Yuning, right?
Okay.
And the way I got in touch with Yuning was another friend, you might know him, John Kim at Amasia.
Yeah.
And he and I have known each other for a long time. We're like brothers and we share life together. But, he suddenly called me out of the blue and said, hey, I have a friend who's going to thinking of doing a startup in fintech. And you're doing fintech. And I was like, John, what is he doing in fintech? And he's like, well, he's doing fintech. You do fintech. You should just meet. It's the same. Just
go for it.
You should just meet and talk about fintech. And I was like, oh my God. Love John, but he's not a fintech guy. Even though he comes from finance, and that's the problem. Financial technology is everything. So,
100%.
It's everything in life. And so even though you're at like many companies in the financial industry, I was at Morgan Stanley and HSBC and many companies and did multiple roles, we actually don't know everything about finance, right? And 100%. The vertical that we want to focus on, we need to learn. And, even though I've been in that industry, I don't know a lot of the business. And so it's a lot of like work learning and then understanding the pipes and, solutionizing and building the right products and meeting the needs of the clients and all that stuff. But anyway, that's how we began. I met Yuning, and his original idea was like, I came back from studies in the US, from working in New York at Blackstone and Goldman. And I was trying to invest my CPF money because I was told I can invest my CPF. And damn, this is like ridiculous.
The process,
I can't
was
do
painful.
it. Yes. I can't do it. It's like I have to go to a bank, take a queue, line up for an hour, and then fill out a physical form, and then you go home and there's snail mail a week later, your account is open. No guidance on what to do afterwards. So you go back to the bank you opened the account with. You're stuck with that bank because you opened it there.
Of course, your CPF is tied. Yep.
Yeah, and then can only be one of the three domestic banks, of course. And then you go there and the teller tells you, well, what do you want to do? And like, well, I want to invest. What do you have? It's like, well, you can buy this fund. With amazing fund, it returned 50% last year, but it's emerging markets. You should buy it.
Yeah. And we're going to give you 50% every year.
Every year, yeah. And we're going to give you a special discount. Normally, we charge 3% upfront sales charge, but we're going to give you 2%.
What a bargain!
What a bargain! Right? And Endowus has removed all of that, right? But sales charges, management fees, the wrong product at the wrong time, selling past performance. And it leads to poor outcomes, and that's a reality that we face.
So my first episode of this show was with Paolo Cironi. I don't know if you know; he's a well-known WealthTech guy. The episode was called "WealthTech Sucks," and the reality is, people need wealth, people need tech, but the industry, the end person on the street. They did not have a good wealth or a good tech experience. If you have $100 million, you get a good experience. But the reality, for people who are not in Singapore, the CPF is our kind of pension fund by the government. Mm-hmm. The reality is, if you don't have a lot of money anywhere in the world, wealth in a tech experience sucks. So for you, when you met Junjing and then you met Greg as well, you then decided that this CPF problem was the one to solve.
Yeah, so Yuning had identified the problem. He had persuaded Greg to join this journey and quit his job at Grab at the time.
Oh, he was at Grab? Because I don't know Greg so well. I wasn't sure what he was doing before.
Greg was actually in private funds at UBS. Okay. So he comes from the industry. Okay. Institutional private markets, which we now do, which is one of the reasons is because we really wanted to solve that piece of the puzzle as well from the get-go. And now we're finally at a stage where we can start doing that. So that's exciting. We can talk about that later. But so there, and then he wanted to be an entrepreneur, the hype. And so he, somebody advised him to go join a startup to learn. So at the time he joined Grab Taxi when it was Grab Taxi.
2015?
Cash only.
2015.
14, 15, I
okay,
think.
so really early.
Yeah, really early. So he was number 3 higher in the business team.
Wow,
with
okay.
Ruben. Yeah,
Hey,
Ruben Lai.
Yeah, of course.
Greg is literally his first hire, I think. And he worked closely with Anthony and Ruben. And he was in charge of the payments rail because it was Grab taxi only. There was a day when it was only taxi only. And then cash only as well.
Wow.
Yeah. And
not much tech going on there.
Not much tech going on there. But he built the whole payment rail across the region. Basically, cool. I don't know if you know, but Grab really made Adyen what it is, right? And so that was kind of the journey he took. And, Yuning and Greg had known each other. And so they were talking about this at some dinner and then, converted Greg over. And Yuning was actually committed to doing some private equity real estate for his father-in-law. So he was like, okay, Greg, you quit your job going first.
I'm going to do this. You, on the other hand.
Yeah, on the other hand, I'm gonna get my safe, secure paycheck. You take the risk. And Greg is younger, so he plunged in. And then I met Yuning and we were like, immediately hit it off because I had this massive problem statement.
Sure.
And he had a actual, problem specific problem in his soul he wanted to solve. And it was exactly in line. Very few people think this way. And
that karma, people talk a lot about how you do a startup and it really sometimes is a coffee or
it was literally a coffee at Paul opposite UOB Plaza. That was it. I still remember. And we just got so excited talking about each other's passion. And then so he brought me and Greg together. And so we met as a team. And then that was it. That we just
So when you started with Greg, you hadn't met Greg before. You didn't know.
No. Well, I didn't. I did meet him straight afterwards.
Okay.
Afterwards,
but you didn't have a long-term relationship.
No, I didn't have a long-term relationship. We came together for this mission and for this business.
Honestly, and the fact is that and we'll talk about the whole journey. You guys have killed it. It is so cool because that doesn't always work. That is a risk itself. Greg can be a good dude. You can be a good dude.
I mean, Greg and I always say we didn't always see eye to eye early on, and we might not have even gotten off the ground because we had such big differences early on. And, that's just...
But you can have differences as long as it's a respect, right?
Oh, absolutely.
It's not that Jeff Bezos knows everything, but he has this thing, disagree and commit.
Yeah.
Sometimes you have to... you can't always be right. Greg can't always be right. Mm-hmm. Sometimes you just got to take a decision and go.
Yeah.
And as long as you do it with that right spirit, it might not work out.
Absolutely.
But you are there together and built. So Greg quit his job and you guys were off to the races.
Right, we're off to the races. And I thought I was going to just be an investor, but I just jumped right in and got going. And literally we were 5 people in a WeWork office. It started from Yuning's basement and then moved to WeWork's 5-person office. And then, the rest is history, I guess. Yeah.
When you started it, right? So you were just an investor. You were starting it there.
Mm-hmm.
You was getting the CPF. And again, for listeners outside Singapore, this, to me, when I think about what you have built, and you tell me if I'm right or wrong, getting the CPF was so important because here in Singapore, everyone uses the CPF. It's trusted. Singapore government, it's trusted. Was that always the aim? Because there were some robos who started before you.
Absolutely,
Some have done well, like Stashaway's growing. But there was another, I forget the guy. There was a guy that started before.
Auto Wealth. No. So Smartly.
Yes. And
Smartly
I knew those
guys.
young guys.
Yeah, I did too. I met Arthur recently.
And
he's with Kier as well. Yeah.
Arthur's with Chocolate. With Wolfie.
Yeah, with
and I remember thinking, these guys are really cool young guys.
Yeah.
But they just don't have quite, and I don't know what the right word is, the ability to get embedded in here.
Yes.
When I saw
There's
you guys,
the local market, understanding the local market, and
getting that
the
CPF
clients,
I'll be honest. So when I started Bamboo, I went to the CPF.
Yeah.
And I had an introduction to one of the top people there.
Yeah. And how did that go?
And I went in. This is 2016, Sam. I've never told you this.
Exactly.
And I go in,
told me
and
this,
you know me. I'm just going to excited to say I blurt out much more politely than this.
Yeah.
But just like you said, the CPF process sucks. I'm a PR here. I told them pretty directly that the process sucks. That you need to change it.
Yeah.
and at the time, and they're like, and they certainly listened.
Yes.
But at the time, I had like 3 people, no tech.
Yeah.
I was just stating stuff. I didn't really have a solution. And I was also busy doing other B2B stuff. It was just, for me, another client.
Yeah.
But maybe tell me about that journey for you getting that, because that is, Singapore is a big thing.
That was, like, first of all, that was the goal from the get-go.
Okay.
Like, to do CPF. That's why we came together.
Okay.
Right? Otherwise, we wouldn't come together. If it was just another robo, then, there's plenty out there. And they all pretty much, okay, I'm not dissing anybody, but they all look quite similar in the way they approach the business. And, there is like, a lot of finance is not rocket science, right?
Yeah,
if you're trading stocks, Robinhood, it's not different from other stockbrokers. The experience may be different. You enhance the client experience, or the cost may be different. There's different things that you can do, or focus on different specific areas, fractional stocks or whatever it is. It's the same thing with wealth and robos that, to the layman, right, it doesn't look that different.
Correct.
And for us, we didn't feel that there was a huge competitive advantage or a moat that we can create around that robo model. And so we wanted to be the robo pension, basically, the pension
Smart,
model.
Man.
And so there was a massive problem, and it was a massive growing societal problem, because CPF, for those that don't know as well, is a central provident fund in Singapore. It is a massive system because you commit 37% of your income, 37. And it's to a cap of $37,000. So it pretty much covers everybody, right? To the max almost, every year. And it's a mandatory savings. You save 20% yourself, 17% from the company. And, it piles up.
It does.
And it's used for everything. So it's a total social security. So it's not just your pension. It's actually your housing, school, education, medical, everything.
Yep.
And that's why the number's so high. And actually, if you really strip it out, the pension piece is tiny. CPF Life gives you like 1,500, 2,000. And in Singapore, for most people, it just isn't enough.
Yeah.
And so there is a growing pool of money in CPF that we thought should be utilized to have regular savings plans and invest for the long term and build security for you and your family and your loved ones over the long term, because it's a perfectly suited model. It's like mandatory.
Yep.
You save every month. And it's a meaningful chunk.
It's trusted.
Yeah. So we went after that, but it really was a difficult build because no one had really thought about doing a technology solution. And so we had to literally from pulling data from GovTech on CPF balances to integrating SingPass to do a log on, working with the banks, the 3 banks, the Asian banks that opened the accounts, but channeling it through. And then the final thing was actually there was an oligopoly of the fund administrator. And actually the problem is not CPF, it's actually those guys who were the gatekeepers ripping people off.
Yeah.
And so there were only 3 players, iFast, Navigator, which owns Dolodex and is now owned by Singlife Aviva.
Correct.
And then it's Philip, right, with their Poems platform.
Yeah.
And these are the 3 fund platforms that really dominated and had a firm grasp on the CPF market. And they were charging ridiculous fees, sales charges.
Like oligopolies do, right?
As they would. And when we came in and said, hey, we want to solve this problem for the end CPF members, reduce costs from, at the time, 3 to 5% of buying a single unit trust, mutual fund, to down to less than 1%, even the CPF board were skeptical. They were like, I don't know how you get there. But you know where we are? We're like 50-something basis points.
And it's massive.
Well below 1% now. And we solved that with bringing in better products, lowering, using technology to lower cost and removing a lot of the, misaligned incentives and commissions for pushing products and all that stuff.
Yeah. But you make it sound like you just had better technology and you did all of that.
Yeah.
There must have been just a huge amount of just sheer bloody mindedness because you would have been told no by the fund administrators many times. Because nobody wants to give up 300 basis points. Like nobody wants to give that up.
No, that wasn't impossible. That wasn't an impossible task because the 3, none of them wanted to work with us.
Of course.
And we had to work with one of them. So we kept going back to CPF.
You must have been going in.
And then the Ministry of Manpower. So CPF is governed by the Ministry of Manpower, the retirement system team. Amazing guys, really, really great guys, working really hard to solve this problem. And they knew what the problem was and what we wanted to do, they knew was what was best for CPF members. And it will lead to good outcomes over the long term. We don't know about short-term volatility, but long-term, this is the right thing to do. And reducing cost is absolutely something that
2% a year, 200 basis points a year over a lifetime, over 20, 30 years is a huge amount.
Even a 1% difference compounds to a 350% difference over 30 years. That's like the difference between 10 million and 7 million, less than 7 million. It's like ridiculous. That's a lot of money.
Yeah.
So we really absolutely focus on the cost side. And as a result, the Ministry of Manpower and CPF allowed a fourth investment administrator just to make the Endowus model work. And that was UOB-Kay Hian, who was not a fund administrator. They had actually applied before, and I don't think they got it.
But now,
as a combined entity, the CPF and MOM were comfortable that we could actually do it right. And so it took 2 years and millions of our own money without the guarantee of success, without the guarantee that even the government would even approve this thing. After 2 years, at the end of 2019, we finally got it all working seamlessly and on an app and launched the service.
You know the phrase, Maya Angelou, never doubt that a small group of committed people can change the world. Indeed, it's the only thing that ever has.
Precisely, yeah.
That's how shit gets done, right? That's
my other favorite quote is George Bernard Shaw. Many people see the way things are and ask why, and then there are those that look at the way things could be and ask why not. Yeah.
And it is, but there must have been times during that you must have been like, Jesus Christ, I'm done. Like
out.
Or your family, everyone's like, no.
Well, go back to my family. Yeah, let's not mention my family. My wife was about to kill me.
but that is that part of that founder path. There's highs of highs, but there is the times when you're like, I know this is right. I know this is going to work, but there's just a lot of stuff that's hard to get through.
And this was particularly difficult because no one had really built it, right? I mean, and Ned, we met and talked, way back as well, but it was so purpose-built tech that we couldn't use or get help from anybody. It was literally trying to figure out, the regulations on how we transfer money, how we even reconcile the booking, the trade back to the CPF and the SRS. And we wanted to build a holistic platform that allows you to invest all of your money, because that's the only way you get a bird's eye view of where you are, right, in your journey towards long-term security, right? And so we wanted to help everybody manage everything in a single platform. And so that was the goal, and CPF was absolutely necessary for the long term. And we really encourage SRS, which is a supplementary retirement scheme, tax incentive scheme, where you can save an additional, I think close to 16,000 for a PR and Singaporeans. But if you're a foreigner, you don't have CPF, so you actually get a $37,000 tax break every year. And you can do a monthly savings and invest in financial markets and even generate returns. So all these things, we wanted people to take advantage so that they can do better, right? Invest better to live better. That's our
and that's goal. So 2017, 18, 19, you build it, you get CPF. It starts to
2019, end of 19.
End of 19.
Yeah, it took 2 years,
You get CPF. Was there a point when, I'm sure, day one, you get $1 investment. You're like, oh my God, this is amazing.
Yeah. It works.
It works. And I'm sure there's bits where it didn't work, and it works. And you can't mess up as well. Let's be clear, right? You build this and it falls over, there's going to be issues. But
consequences,
when was the point when because in Endowus, and we'll get to where you are today, and it's done great. Was there a point when you realized, holy shit, this is going to really, from that initial coffee when you're like, hey, I have an idea. Was there a point when you started to feel, this is real? This is, because it's real today. Let's be clear. Was there a definitive point that you knew?
I don't think there was one particular moment of an aha moment, but I think the level of conviction that we had in what we were building was almost absolute. The belief that this is the right thing to do, this is the right way to do it, and we're building it in the right way. And therefore, it's kind of if we build it, they will come. They will kind of field of dreams kind of thing. And we had absolute total conviction that this was going to work, and this is what we needed to do. And so I think that, we have doubts because more about whether we can actually get the approval at the beginning.
Yeah, right.
Yeah, because that was a big thing. Because it's a 0-1, right? That's a 0-1 moment. If the government or Ministry of Manpower or something doesn't happen, then the whole business model is shot. And so, it's a 0-1. But beyond 0-1, I think the conviction was very high that this was going to be, the better option. This is definitely the lower cost option. And this is definitely something that will will succeed.
So you met the right founders, it seems. You had a good problem to solve. You convinced the people who needed it to be solved, the government here.
Yeah.
But then you've done something, we talked about this as we came in. I'm a marketing and sales guys.
Yes.
You have built a brand. It's not a global brand, obviously, because we're out of Singapore, but in Singapore and around, like, you've built a brand. I'd love to hear about that, because you've taken like not a traditional approach to it, right? Because wealth used to be two old people on a yacht sailing into the distance. Look, you can retire with us.
And then it turned into FIRE, right? Yeah. Financial independence, retire early. Everyone wanted to retire in 30s and 40s. That was the ultimate goal.
I thought you meant the FIRE Festival.
No,
that was the how not to do stuff.
How not to do stuff, yeah.
What was that thought on the branding, sales? Because wealth hasn't been cool. It's so important, but it's been seen as so just hard to use and not young people don't do it, and it's confusing. How did you think about that marketing? It's been a big thing for you guys.
Or they gravitate towards a more exciting, fun, like latest cool thing, which is like meme stocks or crypto.
Yeah, let's play GameStop. This will serve me in my old age.
Precisely, yeah. So that's what you gravitate to if you don't solve the problem for a whole, base of users that need to actually start early and do it in the right way. Because there is a right way to build wealth. There's science to this wealth. There's a science to investing.
But it is boring in this era where swipe, flip, crypto, whatever.
Instant gratification.
Wealth is not instant gratification.
No, it's just delayed gratification.
It's hard. So how did you go about thinking about that as the brand?
So I think like wealth is not an e-commerce business, right? So we're not like talking about a $50 headset that you transact, right? And to be honest, wealth tech is a broad term, and people throw in the Futus and Robinhoods of the world and everything else in between. And crypto sometimes goes into wealth tech as well. But to be honest, for us, wealth, true wealth, long-term is many things, but in the financial context, it's about building wealth over the long term. It's a stock concept. It's not a flow. Yeah. And it's not a transactional thing, right? That's what we wanted to avoid. So on our platform, we don't have any single stock trading. We don't even have ETFs, no intraday stuff, no exchange traded products. It was actually intentionally just a daily liquidity, daily NAV without premium discount volatility, but at NAV, you have an open-ended product that you can buy and sell into. So it gives you liquidity, but it's a daily liquidity, and anybody can, invest and build wealth in the right way over the long term. So that was critically important. And the reason I say it's not an e-commerce or a transactional thing is because you're handing us, especially us versus everybody else, even the other robos and other people, they have like great solutions and everything. I'm not bashing them. It's just that the business model is fundamentally different when we manage your pension.
Yeah, right.
Right? You're handing over your life savings, right? And your future to a company that you've never heard of. And so it's the ultimate kind of trust needed. Yeah. And it's the ultimate like chasm that you need to cross. And the only way to do that is to build brand and build trust. And so the way we build trust is going after the CPF market, because it is the default system,
100%
government system here in Singapore, and everybody has it, everybody knows it, everybody has money in CPF, and therefore that is an ultimate trust builder. The other thing that we did was we focused a lot. So a lot of companies focus only on solutioning, right? This is supply side problem.
Yeah.
We need to fix it. There's a pain point. We'll supply this, and if we build it, they'll come.
Yeah.
That's not enough.
Yeah.
For this business, especially of wealth, we need the demand side to change behaviorally.
Yeah.
We need people to stop punting stocks and, expecting 50% return in 2 days, and build wealth in the right way. And that needs education and improving financial literacy. So there's a lot of commitment from our side to build the demand side, solve the demand side problem, which is, why we are one of the biggest platforms for content. Written content, and during COVID, we've quickly pivoted to webinars, and we have in-person events, and we have the huge WealthTech conference that we just talked about. That was really almost for free. Everything we got was for charity, or it was free, and it was free on virtual, right? So all that content and education and efforts that we put in, we actually call ourselves a content company as much as we are a financial service company.
Right? I love that, and you have. You've taken this approach, like I love, again, being in Singapore, the advertising, the different generations. You're not saying we sell funds. You're saying is wealth needs to be done, even if you're young.
Yes.
And you've used like influencers in that space, which is kind of rare.
So what's also most important is, being authentic, right?
Yeah.
We don't want to hire like famous celebrities and put them on, plaster them. And no, these guys actually, we talk about Joanne Pei and, Ben Keng and, everybody else that is in our advocate campaign. And we intentionally chose real clients who are interested in what Endowus is doing, understand our value proposition and our mission and vision and our purpose and buy into that. And that's why it's authentic. Even the advocacy campaigns are genuinely authentic. They really do want to do better and they feel that Endowus is helping them. And that's why they come on those programs. We don't pay them, right?
It is cool. Yeah. Like it's weird because neither of us are tech guys, right?
Yeah.
We've been in the finance industry.
Yeah.
One of you,
full transparency, like Joanne and Ben have to make a living and they're independent professional artists.
Yeah.
And so we have given token like financial payments.
Of course.
But really it's because they're clients and they're advocates and everybody else is unpaid. So I think that's something that we make sure that we are genuine and we're authentic in the way we build the brand and we build trust.
But all these different things you've done. So you guys recently got some investment and I think it was Citi that said, the reason we invested in Endowus is that you've solved the cold start problem.
Yeah.
And you referred to it as, why would somebody give money to a company they've never heard of?
Yeah.
I was at E-Trade in the 90s, right? No one heard us back then. And I remember the amount of effort we tried to tell people our brand is good. This is a hard problem. Yes. Like to create that brand. I love this idea. Like why do we love Apple so much? It's years. Yeah. Okay, the product's amazing, obviously. Yeah. But certain brands we feel so strongly towards. And that value, like it's not a tangible value, but I think you guys have definitely understood that. I just love that concept of that cold start. Hey, no one knows you. I'm not giving you my money. I don't even know you, dude. Like, no. To, like, I'll be honest, when I pitch Bamboo, I'm like, we could build you like the same tech like as some like an Endowus uses, The idea is it's robo-tech.
Yeah.
We never suggest we have the same brand. Yeah. And that's where I think you guys, because you're now in Hong Kong?
Hong Kong as well, yeah.
Just two markets at the moment?
Yes. No, and that was very intentional too.
Okay.
But before we get back to that, finishing off that trust element though, which is very critically important and closely tied to brand building, is exactly what you said. We wanted to build trust with the clients and one of the ways to do it is to show that actually our investor base is different, right? So we have a very different investor base to many fintech companies, many robos even, and we brought in certain brands like Samsung, which is a trusted brand, Singtel, biggest retail network in Singapore, trusted brand, like, bringing in the likes of UBS, the biggest private bank, and Citi and MUFG, but also EDBI, right? The Economic Development Board, the Singapore government's global investment arm, those kind of, Prosus, the biggest, shareholder of Tencent and Delivery Hero and all these guys. And the reason is because not only to build trust, but because we need alignment. And we felt alignment is the single most important thing that we cannot compromise on. Firstly, it's alignment to the client's best interest. Yeah. We've lost this concept of fiduciary duty in financial services a long time ago. And we even removed the word service now, right? So it's just finance. It's not financial services.
Because that's right. It was always financial services, right?
Yeah, we're serving the clients. But instead, a lot of these big banks, the clients are serving them, right? And their shareholders. So anyway, let's not get on that one.
You're going to go down the wrong path here now.
No, the wrong path. No, and banks are doing a lot of good stuff, but they shouldn't be doing wealth. No, I'm just kidding.
No, but look, we're not here to, look, I serve banks. Like you have bank investors and I have bank customers, so we're not here to crap on them.
Yeah.
But if wealth had been perfect, Endowus wouldn't exist and Bamboo wouldn't exist.
Yeah.
In the same way that if TVs were perfect, Netflix streaming wouldn't, Spotify music. Yeah. It's not that banks fundamentally tried to do the wrong thing, is that before tech came in the way it does, like they just didn't have to be as great as they needed to be.
That's the point. They didn't have to be. Yeah.
Do you remember like 10 years ago, you didn't need a digital banking app. Now when Revolut comes, if I'm a DBS, I'm like, holy shit, I better have a good digital banking app. What you're doing and Stashaway and Betterment and Wealthfront has to make wealth better because the incumbents are like, holy crap, I better do some nice experience for our end customer. So your point.
And that was the mantra, right? That was the mantra was that, hey, let's introduce best practices like global standards, like financial service, fiduciary, removing conflict, right? Being independent and fee only. This like business model of independent financial wealth advisory led, low cost, all these concepts, and using technology and leveraging that to provide better advice, better access, better cost. And we really do feel that we are making a difference. And, if other incumbents and other people follow, that's only good. That's changing society and the industry for the better. And who benefits? The client. And we don't care, right? If they're at DBS or anywhere, really, because the client wins. And
isn't it
that's the mission that we're after. Yeah.
It's funny, man. Like, we've met each other, we know each other, but we never really sat and talked. Like, I can really feel it because from you, like, you really are clear about this. And quite often I talk to founders and we're like, they know what they're doing, but not as clearly. But here's the funny thing, right? We spent 40 minutes talking about wealth. You've never once said we're trying to sell mutual funds or you've never said that. Whereas the incumbent industry, their job was to sell product.
Yes. It's
You've
just
never
selling and
once
pushing
said that.
product.
You've never once said that because the selling of the product is a byproduct of helping the customer.
Yeah.
But it takes a long time to get there.
We don't, no, I absolutely correct. You hit it on the nail. But it really is not about selling. It's just coming alongside our clients as a trusted advisor to go on this journey. It's a journey.
Yeah.
And it's a volatile journey because markets are volatile, investments are volatile.
This stuff is hard.
Yeah, it's hard, but there is a right way to do it. Things like asset allocation, long-term asset allocation drives 90% of returns. What risk bucket you're going into, what asset allocation drives returns over the long term. And so what is the appropriate risk you're taking in your asset allocation to generate the returns you need to meet your goals? And it has to always start with the client. What is your goal? What is your long-term liabilities? What is the pension pot you need when you retire at 65? And it's not a dollar amount. It's not $1 million. It's a income stream of, I need $10,000 a month over 30 years with inflation, and you need to work it backwards and say, how much do I have to put aside now? And what do I need to invest in? What risk do I need to take? And so really, it's a very scientific and evidence-based approach of really trying to solve this problem together of meeting your goals. And that's why it's so fundamentally different from everything else that finance does and what the banks are doing, which is pushing product or transactional, stuff. So it's a very different approach.
It's good. It's changed. I think it is changing. You still sometimes read, robo-advisors are still a small part of the market. Technically, that's true, but in reality, it's great. So you're 5 years into the journey, Sam.
Yeah.
I hate to ask what's the next 5 or 10 years doing, but when we started this interview or this podcast, you said, I'm just getting started.
Just getting started, literally. Yeah. So we have 5 major drivers. One is the pension piece. So Singapore is off to the races. I think we're the only piece that is growing within CPFIS. That's what we've been told. And so, we've crossed $1 billion of pension assets. And so that's all going. But there is headwinds. There's inertia to inaction because everyone's been told not to touch their CPF.
Yeah.
Even though Tharman comes out and tells you need to invest and take control, and everybody else tells you it's still difficult. You have to convert people into this mantra, and that's why education is so important. So that's one thing that is off to the races, but it's a slow grind to get that going. In Hong Kong, we'll do also an MPF. So that's another huge market. And as you know, we are core and centrally pension solutions. So therefore, doing that is really exciting. And we have some really amazing partners that we'll be announcing and launching, next year for also first. And then when eMPF is launched, MPF.
Yep.
And then the other big piece is the digitization, right? Is obviously a secular trend. We're taking share from private wealth, banks, incumbents with a better experience and lower cost. And then the third layer is really the new markets of alternatives and private markets. We feel that that's something that we need to do more.
Because retail never had access to that.
Retail has never had access.
Never.
And we're solving that problem. And although it's still only accredited investors, we are looking at like retail alts products, how we can solve that problem. And we're not building the product. We're a platform business.
Yeah.
And so we work with 80 fund managers, some of the best global, local managers.
I love to see it, man. They're lining up to work with you.
No, it's great. And, and that's because it's about alignment again. We're both trying to serve the client to the best outcome.
Yeah.
And they have the best interest at heart. And they've been suffering because they've had to pay huge commissions to the distributors, like the banks and brokers who own the client. And so they don't own the client, so they have to put the products on. And oftentimes the best products don't rise to the top because the best products don't need to give a lot of commissions. The crappy ones do. And so, the wrong ones get sold to the client. So, we work with these partners who are aligned in solving this problem. And that's why private market alternatives now, we have a growing part of evergreen, open-ended mutual fund style, liquid, semi-liquid alts, fantastic products, private equity, private credit, private real estate, hedge funds. And we want to take that into retail space, and we want to take that into CPF. Why not? Like, institutions are doing it. GIC is doing it with the pension money. Every sovereign wealth fund is doing it.
Don't even get me started in this idea that only rich people should have access to all products. I mean,
Precisely.
It's rubbish. Like, that's a whole
not just
other conversation.
access, but the presumption behind that is only rich people know how to invest. And that's not true. We know that. Don't even get started, right?
Don't get started on that.
Yeah. So
that's a load of crap.
It's actually about, understanding whether this person is educated, and also the role of the advisor in Endowus is so important.
Yeah.
The trusted advisor who's independent, right? Not conflicted by commissions or being paid by anybody else, and is always serving the client's need. We focus on the client, then we can actually, allocate, right? And we start from asset allocation, so we allocate 10% to private markets, and that's the right number. So we need to manage it in the right way and let the right people in. But it's something that is easily possible, that in the future we will have private market solutions and alternatives and hedge funds and CPF. Why not? And MPF, and also. So that's the other leg. And then the final thing is, we've been very intentional in just focusing on Singapore, because we wanted to go deeper and really dominate the market. And now that we are the largest and, probably the most comprehensive full suite of solutions in wealth, and I always say niche doesn't work in wealth. So you can't just be a robo, you can't just be a broker, you can't just be this. We wanted to, from the get-go, be multiple source of funds, CPF, SRS, but full service wealth platform. And so now we're on our way to achieving that. We think that entering a new market is feasible, and that's why we've entered Hong Kong, which is the other major international hub, big wealth market. And a lot of similarities, but a lot of differences too. And that's why we're not just copy and pasting an app. You have to build for purpose for that market.
100%.
And pension is different. Our fund distribution mindset is different.
The whole thing is different.
Client segmentation is different. Everything's different. And so we're really cautiously building out Hong Kong, like mindful that we don't want to just throw money at clients and get going and they churn out. We actually have very, very low churn. People redeem less when markets go down. We actually have never had a weekly net outflow. It's like consistent growth. Even during COVID, because we started in 2019. So 2020, COVID,
straight into
no outflows.
Wow.
2022, last year, bear market, no outflows. So net outflows.
Net outflows, of course, I understand.
And so that's tremendous. And I think we proved that if you advise people in the right way, incentivize people in the right way, and we don't throw like free Apple shares or $250 at them to acquire them, then actually we can change the behavior for the better. The right clients coming on for the right reasons and investing in the right way allows them to behave in the right way, which raises, the most important thing, the probability of success. We just want to raise the probability that people succeed in their investing.
It's pretty cool, man. Like you're clear, right? There's a problem. We're solving it, the probability. So
it's a massive problem. And we're massively trying to solve it.
And it's working.
Big.
And it's because startup stuff
is tough. It's tough.
So we're coming up on time. I'm going to ask you a question. Having listened to you, you're passionate, you believe it, and it's working. And congrats that it's working. Because that stuff is not easy.
Not easy.
I'm going to ask you a question. I think I know the answer, but I like to ask it. This is going to be the last job you ever have, right?
Oh, absolutely. This is my passion project. I say, like, I took there's a Bob Buford book about halftime. So I started in my 40s, right?
Yeah.
So I worked in my career. I was 41 or 42, took a halftime. And this is for the next 20, 25 years. So I love this quote that, we're not building for the next quarter. We're actually building for the next quarter of a century.
Wow.
And so Greg and I are aligned. I mean, this is one of the things that, brought us together is we wanted to build something. Our target is not an IPO. It's not an exit. I don't understand that piece because we have to be with the clients through this journey. And that's a 25, 50-year journey. And there'll be people that come after us and they'll take on the mantle and they should own the business.
Sure.
Right? We should pass it on.
Yep.
Actually, the leading wealth companies around the world have this model where the next generation take over ownership.
Sure.
And we don't mind being a private company forever. Why be a public company? I just don't get it. I invested in public companies all my life. I don't get it.
Because you've invested in them. Let's say you were 20, you've never invested. You think, oh my God, I'm going to be on NASDAQ. It's going to be, listing will be amazing. It's like, no, dude, listing's not always amazing. Public market is a brutal gladiator environment. So because you invested in them, you understand that if you're right, if you can keep Endowus, obviously you have investors, but it's private and growing and achieving for the next 25, 50 years here. Why would you do anything else?
We want to serve our clients for a long, long, long time. And our investors understand. And that's why we have some VCs, but most of our cap table investors are actually permanent capital. If you think about it, all the UBS, Citi, even NASPER's process, permanent capital from their balance sheet. It's not a fund that needs to exit.
They're not looking for that return.
It's not as high.
And that makes a huge difference.
Huge difference in the way we build the business in the right way. We have that long-term perspective.
It's very cool. Well, listen, Sam, it has been an absolute pleasure talking to you, man. It is like, it's going to be when we're like 80, and then we'll be like, remember, like
that podcast we did,
and you guys are now like the biggest fund manager in the world,
and you'll be the biggest B2B robo.
We'll
solving the problems.
We'll see about that. We'll see about that. But before we let you go, I ask you two completely.
Okay. I thought that was one of them.
No, that was not it. These are totally different. Okay. I normally ask this question second, but I'm going to ask it first. You've watched Back to the Future.
Yes.
Okay.
I loved it,
Okay. You get to go into the DeLorean. You get to sit in there. You get to set the flux capacitor for one time. You get one journey. You can go forward or back to a point in time, either in the future or in the past. You get one go. What time do you choose and why?
Honestly, I'm a very forward-looking, optimistic guy, so I don't really look back too much. But the one regret I have is not that I needed to spend more time or I needed to work less or any of those kind of things. But I do think that if I go back, I would have prioritized my family, my wife and my kids a bit better, because I wish I had a slightly better relation. Not that I have a terrible relation with them, but especially my two boys and my wife. My daughter is like, different because she came very late and I was much more mature. But that's the only thing. That's the only thing really. I wouldn't change it because all those experiences what got me here. And, if I knew everything, I wouldn't have made those mistakes, but that's not who I am, right? We all make mistakes. We learn from it, and that's what makes us who we are.
It's such a difficult question in that, because if you go back and change something, you're not going to be sitting here, right?
Yeah, second order effects, third order effects, and, we don't know any of those things. But, literally, I just don't look back much. Good. I'm just not. I reflect on certain things, but I don't like, I wish or...
And that's a good habit because it is easy to do.
There's nothing we can do about it,
All right, last question.
Just improve what we have now.
Makes sense.
Yep.
You get to eat one food and only one food for the rest of your life. What is it and why?
Oh man, my soul food. I was in Hong Kong, and as I was leaving the airport, I didn't have a chance to eat char siu and suyop fan. And so I was like, I got to have my soul food in Hong Kong. But I'm Korean, so I got to have Korean food. And so kimchi soup, kimchi stew, kimchi jjigae, that's my soul food. I got to have it. Like if there's one thing I can eat, that's it. Yeah.
Okay. So we're going to send you back 20 years.
Yeah.
But you only get to eat your kimchi stew for the rest of your life. So that's going to be your new reality.
Same guy.
Sam, it has been a pleasure. Okay. We appreciate it. Thanks for coming
so much, Ned. Real pleasure.
Thanks for listening to WealthTech Unwrapped with your host, Ned Phillips. We hope you enjoyed the episode. Join us weekly as we dive into the ins and outs of wealth tech and speak with our esteemed guests about the industry. If you like what you heard, help us reach more people by sharing the podcast as well as leaving us a 5-star review. That's all for today. We'll catch you next time.